then we can. Okay, perfect. Let me get my screen up for you. Where's trading view? Yes. Okay, cool. So yeah, so this is trading view. So this is of course my chart. At this point in time, I want to believe every one of you, you're already familiar with this, and you've been tinkering around. I'll get to know more during the question and answer session, hopefully. Okay, so so let's try to do a back test of Thursday. Now there is something that you always have to pay attention to when trading, and that is news, right? Because news it's super important in the sense that it's fundamentals. A lot of the what we've been doing all this while has been the technicals, going through the charts, how to draw your charts, how to draw these, how to draw that. How to identify, your supply zone, your demand zone, all of that, that's technicals. Now, we also have fundamentals. Fundamentals basically are the macro, news, and all the, basically news that has to do with the economy that move the market. And it's very important to be aware of those. So usually on the first Friday of every month, there's a news that comes out and it's called NFP. Now, NFP simply means non-farm product. So this large move you see here was as a result, this volatility you see here was as a result of NFP. So basically, it's always important to pay attention to, those high impact news because irrespective of the technical analysis, depending on where you are in the market, high impact news can really affect your positions if you're not aware of them and can also hurt you. So let's do a review of Friday and let's see, because NFP came out on Friday. So I'm going to use this replay button here to do that. So Friday, this is 4:30 a.m. On Friday. So I'm just going to go there. Let me make this particular chart. Let me expand that. Okay, so Friday, this was Friday, right? So now, so this here was around 4:15 a.m. UTC +1. So usually by this time, of course, it's still early in the morning, so I wouldn't be awake of course. So, but then if I play this for you, you see what happens. Now this is 6:15 a.m. By 7 a.m. or I'm already awake, watching the chart. So now I know, of course, that today NFP is going to come out. And just going to be basically, it's just something to watch out for. So now by 7 a.m., I would come on the chart and then I'll mark my zones. Now, what I've done here, you can see, I basically had, a few zones mapped out. So this, for example, this PDL simply means the previous day low. So this was around 4:45 p.m. on Thursday, and that was the low of the day. So I mapped, that out. And that happened also to be, a break of structure, because you can see here by 6:45, this candle closed by the body. Let me make this a little bit bigger. So by, by what time? 6:45 a.m. This candle here closed by the body. So that means that also doubles as a break of structure, but I also know it was the previous day low. So, and then I also map my Asia high and Asia low. Now, of course, in trading, we have different sessions. So we have, Asia session, we have the London session, and then we have the New York session. So usually you would have the market for UTC +1, that's, that's more like an hour ahead of London. So you always have, Asia, after the Asia session, you now be coming into the London session. So I'll usually map my Asia low. So I know that this is my Asia low around 6 a.m. That was the low of the Asia session. And I also map my Asia high. So I know that around, 4:15 a.m. Asia made a high here. So I'll map that out. Now I use all of this to build confluence. Now, confluence simply means what I look out for before I take a position or before I take a trade, right? So I look out for those things, and those are the criteria I look out for. When I see them, then I can now begin to prepare myself to take a position. If I don't see them, I don't take a trade. So when I map my Asia high, my Asia low, I know where, basically the range, where Asia played. So I have that mapped out. I map this, of course, this brick of structure, which also doubles has the previous day low. I have that. Then this Asia high here, you could see that the market reacted to, to this zone here. So I'll also map that. So I'll draw that zone because this candle here, got to this zone and then reacted and pulled back, right? So I'll map that out. Then what else? Then I think, okay, so cool. So from the previous day, we also have here, you can see that this candle, let me draw that. You can see that the market was just dropping on Thursday, right? And it was dropping in anticipation of, NFP that was going to come out on Friday. Usually it happens. So it's more like the chart or the market prices in NFP before NFP comes out. So the entirety of Thursday, if I just make this a little bit, if I just, drag this here, you see that the entirety of Thursday, the market started just pricing into NFP even before Friday, right? So anyways, the market, peaked here, the low, and then you see this, the market from here, peaked here, the low, and then you had a pullback, and then it came down here again, and then we had a break of, a change of character, right? So this is a change of character because the first pullback after, a low, that is called a change of character, not a break of structure, right? So we call that first one the change of character. So we had this, so I'll also normally map this. And then from here, it also now pulled down, down here. It did not take out this low. If you check out this, it pulled down and basically just wicked it. And then the body didn't close below this low, right? And then from here, it pulled back up here. As you can see, of course, it didn't take out this high. So basically, you had a change of character here. And then you had, the Asia session just playing within this range, right? This low here and this high. And then so Asia peaked here. And then Asia now, pulled back and made a low here. And then, pre-London session, the market now sort of took out Asia's low and made a low here. A new low here. Now, this new low took out this previous low here, which of course was the previous day low, and then that was it. Now, from here, this is 6:45 by 7 a.m. I'm already in the market. So I would usually map all of this just so that I understand, what's happening in terms of structure in the market. Now, okay, so that's that. Now, let me just delete this. So with this, you have an understanding of how I view the market. So I'll map all of this structure so that I know what I'm doing. Now, I will be expecting, of course, to first off, typically, I want to see Asia low go, and then I would want to see a change of character after, Asia low has gone before I begin to think of how to, take a position. So let me play this candle and let's see what happens. Okay, so you can see this created a low, tried to pull back up, nothing really, and then came back down with the previous low, did not close by the body. Let me keep playing that. Okay, now we've closed, or we haven't closed by the body. You can see it's still just weakening this previous low. Nothing is happening there. Still a wick. Okay, still a wick. Okay, so you can see now, this came down here, made a low, pulled back up, tried to, break that low. It did not happen. And then it pulled back up, tried to take out this high here. And then that did not happen, just left a large wick. I'll continue to play. So for me, I'm not doing anything at this time, right? Because it doesn't meet my criteria. So next candle, still a wick. Next candle, still a wick. Okay, cool. Now you can see here, this candle here, has broken this previous high by the body, right? So for me, on the 15 minutes, before I consider anything change of character or break of structure, I always want to see that the high is taken out by the body, not by the wick, right? It has to be by the body. That's basically how I read it. So this has taken that out. Now, my expectation with this, I know that Asia low has been taken. I've seen a change of character. In terms of how I trade, I would now sort of map out the zone where I want price to return to, and then I'll now look for an entry. So how do I do that? So I'll take this out, this rectangle icon. So this was the high that this candle rather was the candle that took out this high, and the low that took out this high came from this candle, right? A large wick. So I'll just draw that out. I'll just draw this candle like this. Okay, cool. So I'll just draw that out. So now I would expect that the market is going to come back into this zone. Now, why do I want the market to come back into this zone before I look for a position? Simply because this was the zone that actually caused a break of this high, a change of character. And I know that Asia low has been taken out. So my bias will be let price come in here, and then I'll look for an entry to see if I can trade it to Asia's high, right? Typically, that's what I'm going to do. Now, let's look at what happens. Okay, so this candle basically comes into this, right? As you can see. So this candle basically comes back into this zone, and then I want to look for a position. Now, there is something that also I want to highlight here. If you look at this Asia high here, you can see that this high, let me take out this candle. You can see that this structure here, pull back, made a high, pull down here, came here, and then you can see there was this minor structure. It pulled down here, returned, the candle sort of, pushed back, and then you had this break, this change of character here from this stuff. Now, if I want to draw, let me draw this again. If I want to draw every, every structure, is going to look something like this. Now, this is going to go from here to here, down here, and then we had this candle here. Then we had a pullback here. You see this white candle. Let me explain how that works. Let me just explain this so I don't get you too confused. Now, if I want to explain every candle movement here, you see this from this low, basically this was the low, and then this candle was an internal candle. That's why it's white, right? I think I've shown you how to add internal candles. If not, let me just show you how to do that quickly. What you just need to do to add this internal candle to your own chart, you just need to go to indicators here, click on this button or click on indicators. And then when this opens up, just search for inside bar. You can see this inside bar version 2. If you just search for that in your, let's see, inside bar, right? Version 2, that's the one I'm using. So you can see inside bar version 2, developed by this guy, ABD Martin something. So if you just select that, all the internal candles on your chart will now change to white, okay? They'll change to either white or maybe some color, and then you can decide to modify that if you want to. But that's basically how, you can begin to see all these inside candles. And it's important anyways to understanding how this strategy works, because this price action here, it's more like this. So this was the low, and then this was the inside candle. The next candle took out the high of this candle. So that's an entire up move. And then this pull down, this candle basically came down, took out the low of the previous candle, made a new low. And then you have this next inside candle that sort of continued the up movement. Now you can see that the next candle took out the high of this inside candle, and that means the up movement continues. And then the next candle took out the high of the previous candle, so we made a high here. Now look at this next inside candle. You can see the high of the candle did not take out this, so that means we pull back a little bit, right? And then we now pull up again. This next candle now took out the high of this candle and took out the high of that candle, now pulled back up again. Now this next candle took out the high of this previous candle, as you can see, and then we made a high here, right? Now this is me trying to explain to you how to interpret all these bars as you see them. Now after this, we had this low. This candle basically pulled back. The next candle took out the low. The next candle took out the low. The next candle took out the low of the previous candle. The next candle took out the low of the previous candle, and then it continues like that. So all the way down here, right? Now, what happens next? And then we had, this pull up again. This candle takes out the high of this candle. This candle takes out the high of this candle. This one pulls back a little bit. So you can see if you want to draw every movement, it's going to look like that, right? So we had this one pull back a little bit, and then this candle all up move, because the candle of the next candle takes out the high of the next candle, and it continues like that. And then we had this pullback here, and then this internal candle, and then a little pullback here. And then all of this was an up move, because you can see the candle following takes out the high of the previous candle. And then here we pull back, and then here we continue upwards, and then here we pull back, and then we make our upward move. So you can see that is how you basically get to draw, each structure. So if you don't want to be doing this, of course, you can just look at, the overarching, structure, and then just draw your zones. But this is just for you to really understand the nitty-gritty of this candle movement. So we made a high here. This next candle took out the low, of the previous candle, and then pull back up a little bit, and then pull down. You can see that, and then the pull back up, and then took out, that candle, and then all the, other candles took out below the previous candles, and then we made a low here. So you can see, how that structure, right, was formed. Now, with this, you can see that based on this movement here, right, this, looking at this, you can see that this was a low, and this low was taken out by the body. If, as a matter of fact, not even this candle, it was actually taken out by this candle. So we know that there was a change of character here. After coming into this zone, there was a change of character here, right? So with this now, we can also draw a zone around here, because that was where, this candle pulled back up into and then broke, structure. So we can draw that zone. So with that, let me just take out, all of this that I have on the chart. So looking at that, let me bring out this rectangle candle, tool, and then I'll just draw this zone. Now, because this price came down here, pull back up a little bit, came down, pull back up a little bit, and then broke structure, I can decide to just draw, the entire zone like this. And then I'll just draw that zone. Now, that tells me when I come onto the charts, by around 7 a.m., I can see this structure, and I know that this is also an important zone. So even though I've seen a change of character here, I would want to see a test of this before I can move into this. But I'm also conscious of the fact that structure also, has been built around this area here. And with this change of character, there's every possibility price will come into this zone and react to it and then pull back. And that was exactly what happened, right? So you can see after, before the change of character here, price was, coming into zone and then reacting to this zone and pulling back, reacting to this zone and pulling back before price eventually fell into this zone, right? So now with that in mind, we have the change of character here. Price has pulled back into this area. I'll try to see if this area is going to hold, and then I'll get a trade to trade back, to Asia high and thereabout. So let's see if that works. So this is 15 minutes. So I'll now go down to the 1 minute chart. I have a lot of drawings here already. So I'll just take all of this out, because I wouldn't have taken some of these trades anyway. So I'll just join them out for my own benefit. So yeah, so now I would typically want to look for, a 1 minute setup, and then I'll take the trade if, it presents itself. So this is where we're at. So I'll just draw this. Okay. Now this price doesn't seem to be giving me what I want to see. So I'll just keep drawing this. I know I'm in the 15 minutes points of interest, but price is not giving what I want to see. Now, the reason why you see this red here is simply because when I saw this, I said, okay, so price has, it's doing something around here. So what I would usually want to see is, this like this, and then price, made a low here. Price comes into this zone and then pulls back. I would want to see a break of this, high and this one here. I would want to see something like this. And then when I see something like this, that's my 1 minute setup. So that is a flip. And what do I mean by flip? That simply means there was, demand. Demand came into the zone and then sort of, pull back, and then there was a sell-off. So a sell, and then demand now returned and took out this high. So that's a sell to demand flip, right? So I would want to see a sell to demand flip before I take a position. Now, when I see something like this, right, I see, price comes into the zone, reacts to it, and then, breaks that zone. Then I would now look for an opportunity around this area that, caused that flip, right? So, but you can see that price didn't do that. So I didn't have a trade there. So I just left this anyways at the time there. But this is how basically you continue to draw the structure until you see what you want to see. all you're doing is mechanical trading. So you're not trading based on emotions, you're trading based on what you see, right? So we continue to see this in the 15-minute zone, no 1 minute structure to enter the trade. I'll just continue to draw that. And then this, just breaks structure, just takes out the 15-minute zone. So this has taken out the low of the 15-minute POI I had drawn. So that means I don't have any entry here. So what am I going to do? I'll go back to the 15 minutes to look for structure again. So this is basically, how to look for, entries. So you can see here on the 15 minutes, the low has been taken. So I want to build another new structure. So that means this POI is, I'll use the word not useful or useless, right? Because it hasn't done its job. So I'll just take it out. Now I'll look for a new structure to see if I'll see or if I can catch a trade. So on the 15 minutes, I'll play the candle. So let's see what we have. No structure yet, nothing. Price just playing around. Nothing is really happening there. Okay. So now on the 15 minutes, let's look at something. Here, initially, we had Asia session. We had a change of character. Price came into that Asia session zone, which, I wouldn't normally trade. If I had a bias to look for trade in this zone, I would have actually traded, this zone, but I didn't have a bias for that. So I didn't take that trade. Right. And then I was looking for, hoping that this POI around here will stand. We just saw that earlier, nothing happened. It did not work. So we just leave that out. Now, the next thing is because this was the low and then this candle took out that low, we now have a break of structure on the 15 minutes, right? So I'll just write that out, boss. Right? So we have a boss, right? A break of structure. Now, when a break of structure happens, what's the next thing? You draw the zone that caused the break of structure. So this was the low, and then this candle took out this low. So what was the high that produced this break of structure? It was around here, right? So what do? You draw your zone from there. So I already have something I'd already drawn from this top of this candle here. You can see that. So I drew that, right? So we had that there. But something also, there's also something important to pay attention to here. Now, trading is artwork, really, right? And gradually you begin to put all these pieces together. But I just want you to follow, my thinking here. So from this low, we made a high here, and then price couldn't really break through. And then price, made a low here, not by the body, just a wick, right? So we know that we are not considering it a break of structure. And then price, made a new high here. Also, wick, and then by the body. So we have that there. And then what happens? From this high here, price now broke down, and now made a new low here. So we now have a break of structure, right? This was a change of character. And then here we now have, our break of structure. Now, this is a break of structure because this was the original low. And then this price basically doing this was a break of structure for us. So we have this now. And then what happens next? Because this is our break of structure, we expect that price could come into this zone and react to it and then pull down. Okay. So what you now do is you can now draw out that zone, your POI in that zone. So I did that by drawing from this candle here to this, because price came up here, pull down, pull back up a little bit before breaking down. So I'll now draw this last candle here. Okay, so that is now, my new zone. So I expect that price will come into this zone and I'll then look for short opportunities, right? Because I've seen a break of structure, I want price to come into this zone. Why should it come into the zone? This was my last candle. Look at price action here. This was the low, price came here, made the low here, made a high here, pull down, this candle and then pull back up a little bit and then broke structure. Right? So I draw this last candle, the pullback that caused the flip that caused the break of structure. So I'll draw that as a zone. So I'm expecting price to come in there and then I'll look for a short opportunity. Now, let's see, did price do that or price did not, right? So this was the last candle. So let me just take it back to this candle. So immediately I see this structure here. Now, the next thing is I say, okay, I'm looking for price to come into this zone, and then I'll go to my 1 minute and look for an entry. So let's see if we get that. Price did this. You can see it almost came into that zone, but did not do that. The next candle, Next candle came close, still did not give me anything. Now, for me, what I was doing yesterday was, because I have, my rules, if price doesn't come into the zone, I would not take a trade. That's just the rule, right? Now, that might mean that sometime I will lose trades. I may not take trades I want to take, but that's perfectly okay because these things repeat themselves literally every day. So I was waiting for price to come in here, but unfortunately, I remember yesterday, price didn't come in here. So let me go to the 1 minute and show you what happened. So I went to the 1 minute. So I was expecting price to come into this zone, but price did not do that. Now, but price was just playing around, this area. And then something happened. Before price could come into that zone, price now formed my typical 1 minute entry, but I chose not to take the trade because it was outside my rules. So this was what price was just doing. Now, I knew that this was a low and price was sort of consolidating here on the 1 minute. And then, look at considering that this is a low, of course, and then you had all of these candles, the 1 minute basically, giving some funny structure here, or interesting structure, I'd say. And then you had this high and low and then high, and then it came here, and then let's see what happens on basically that was what price was doing, rather. Sorry. So let me play this candle so you see what now happened. Okay, cool. Now, based on how I trade, right? This here was a viable entry for me. However, I did not take this. I was actually watching this when this, this price was doing this, but I didn't take this trade because what I'm looking for is I want price first to mitigate my 15 minutes POI because that was the last candle that produced the move. So I wanted price to come in there before I take the trade. And the reason for that is this. You see these two candles here. This candle, price came in here, pull back, came in here again, and then pull back. Now, sometimes price can do this, and this might serve as liquidity, right? We call it liquidity, or sorry, liquidity or inducement, right? Or liquidity and inducement. Now, what that means is that you may see the structure form and you say, okay, I've seen my 1 minute structure. I want to take the trade, but then price will now use this zone as an inducement to now come into the POI before giving the 1 minute structure that will now move, right? So sometimes price does that. Now, if I had taken this trade, it would be a risky trade and might actually be me breaking my rules, right? And not really following my trading rules. But let's see, because now this was a typical trade, but not in my zone. So price did this. Look at what price did. Made a low here, pull back up, came down, did not take out the low, flipped, pushed back up. And then what happens? Price broke down. This was a flip zone. So basically price came in here, a sell, a demand, and then came in here, reacted, demand, and then sold. So a demand to supply flip zone, right? So for me, this is what I would always want to see on the 1 minute for me to take trade. And then when this happens, what do? I'll typically just take this tool here. Let me draw it. I would normally put it on the last candle, right? That caused the flip. And then the low point, I'll put it usually around here, maybe the flip zone, or sometimes I'll put it on the last, maybe the last candle that pushed up or something, but sometimes I'll just put it for the entire, flip zone, just so that I have a good picture of what I'm doing. So when this happens, I would now, pull out my, my tool, my short tool, and then maybe, or if a long tool, depending on the structure, and then take a position. So I'll just pull that out and then I'll take a position now, and then let's see what happens. Price came, tapped into that, and then what happens? Price just moved away, and then nice 1 to 5 trade. But I didn't take this because my zone was not mitigated. Of course, this was painful because I felt, oh, nice price action, but I chose not to take it, and that is okay. Now that played out. Let's now see what happens next. So we'll go back to the 15 minutes. So you can see price did not come into the zone. Now, this is a recap, of course, of the entirety of yesterday's trade. So price did not do that. And then what happens? Price now changes character here on the 15 minutes. You can see that did not tap the zone and then came and changed character here. So what happens? That simply means that my expectation, of course, was not met, but then price is forming a new structure. Let's see what happens. Now, this was already 12:45. because I knew that NFP news was closed, I would typically not be taking any trade at this time. I'll just be watching what happens. So 1 p.m. price now has come into this strong 4-hour zone. Now, this was already drawn on the 4 hours. I wouldn't bug you with going to the 4 hour, but this was already drawn. So price has already tapped it. So let's see what price continues to do. Okay. Oh my, sorry. Now, this was 2:30 now. This was when NFP was, was due to come out. And as you can see here, let me just take that out so you can see how NFP works, just in case you haven't seen that before. Okay, so this was 2:15. So typically I will not be trading at this time, right? Because I know NFP is going to be coming out and then price can do anything. And usually people who trade things like this, except you want to gamble, and they trade the news, but you can always look for structure after the news, and that's what I'm going to show you. So now 2:15, NFP is bound to come out by 2:30. So let's go to the 1 minute and see what happens. Now, so this 2:29 now on the 1 minute. So let me draw the next candle. 2:30 NFP comes out. Let's see what happens. Do you see that? Do you see how that candle was formed? Let me take that candle out again and just draw that. Now, that is why it's not always good to trade the news. Look at what this candle did. It caused a large wick here and a large wick, both sides, basically annihilating anybody who was, having a position open, depending on their risk and all of that. So this is why it's not good to trade the news. You just stay off the market when the news is out, and then you just watch what happens. Now, let me draw that candle again. So we just see that. Okay. So 2:29, that was this time, 2:29, 2:30 NFP, look at, you see that? Large wick, both sides, so it's always not good to have a trade open at this time. Now, this happens. What do you do now? For us as traders, what we do is that we look for structure again. Now, you look for structure, you see the price basically, mitigated this 4-hour zone. There was a 15 minutes point of interest. It didn't get there. NFP came, sort of took out the low of the previous, the last candle by the week. You see that? And then pushed back up, right? Now, if we look at this, we'll see a few interesting things. I'm going to take out this POI because it didn't do anything. It didn't hold. So let's just take it out. Now, you see a few things here. So here there was a change of character here from price action. So NFP came and took out this, took out this high. And that was, we can consider that, our change of character or a break of structure as a matter of fact, not change of character. And this is the reason why. If you look at this candle here, let's see what price did. Price, from this high, price came down here, made a high here, pull back, and then made a high here. Then this took out, this low here before this. So we can consider this one's, change of character, actually. This pullback and then this high and all of the kinds of consider change of character. So basically, this would be a break of structure, right? So that's just how to really, really just read price action. Now, you'd observe, of course, you already know I don't use indicators. So there are no indicators on the chart, just reading price action, and price action is king. That's just the truth when it comes to trading. So with this now, I now know that there is, we've seen change of character. We now have a break of structure here. So expectedly, I will expect that price should come into this zone and then I'll look for an opportunity. So let's see if that happens. Now, this is post NFP and you can always trade post NFP. So let's see. NFP made, new highs again, the next 15 minutes. And then it seems to be pulling back, as you can see. Okay. Nice. Now it has come close to our point of entry. It just almost, mitigated it just by the tip or something close to that. So when I see this, usually I will go to the 1 minute. Now, I did not do this yesterday, but usually this is what, per the trading strategy, this is what you should do, right? Because it basically gave you structure, and the structure follows, the plan. So you basically go to the 1 minute to look for entry opportunities. Now, I did not do this, but if I had done this, this was how I was going to trade it. I'll just take this out. Now, this was also, NFP trade based on a pullback, but I'm going to bother you with this. Let me just focus on the structured trades. So now this sort of came into this, right? So you see here that we had, so after NFP, after all of this week, to both sides, basically price came into this zone again and sort of mitigated it on the 1 minute and then pulled away. And then, so I can actually draw that on the 1 minute. This zone, I'll just put it to the week there. On the 1 minute, I'll just draw that. My 1 minute point of interest. Why? Because price returned, I reacted to it and pulled away. And then what happens? Since this is a strong zone, because price pulled away from it, I'll draw this candle, the last candle down. I'll draw it this way. Now, when price returned here, right, post NFP, this was like around 3:45 p.m. now, ETC +1. So when price returned here, this is sufficient actually to look for a 1 minute entry. And then you can see here what now happens. This structure here from the top here, all down, and then it came here, this internal candle pullback, and then you had, this down candle, and then price pulled into this zone, and then pull back, and then takes out the high. Perfect setup for my 1 minute entry. Why? Because of a flip, chalk and flip, right? Change of character and also flip. And what do I mean by that? Price comes in here, sells off, and then buys, high. So it's sell to buy, right? So supply to demand flip zone. So this is my typical 1 minute setup that I will actually take. And with this, I now take out this tool and draw this, either the last candle down before, the candle, that took out, the flip zone. I'll draw this and then I'll take my candle and then I'll just enter. So sometimes I'll place this here, sometimes I'll place this here, sometimes I'll place it in the middle, all depending on what I want to do. So with this, I'll just place this here and then you can see, let me take that out so that you see how this actually plays out, right? When you're in a trading situation. Now, it's easy to see this, that the market did this after the fact. But the whole idea of trading is for you to be able to follow structure. And when you see structure, you trade it. You don't have to know what price is going to do. You can be right, you can be wrong. It does not matter. What matters is your trading strategy works. And if you do it over and over and over again, it's going to work. So you don't hesitate, you just take it, right? So this is what it's actually going to look like, because you're not going to see that everything has worked out after the fact. So it's going to look like this. So we've come into that zone. We've seen this. So we normally map this, expecting to see if price is going to give us a setup there. And then this comes in there, good. It pulls back, nice. Now with this is enough actually for me to take this, because you can see it came into this, pull back a little bit, and then broke structure, broke the high by the week. Remember, on the 1 minute for me, I'm perfectly okay to take the 1 minute. If price breaks, the 1 minute high by the week on the 1 minute, I'm perfectly okay to take that trade. So with this, I will draw this out, and then I'll expect that price is going to come into this zone and hopefully tag me in. And then I can now ride this, to the top, basically, because NFT has shown that its bias is, to the top, and hopefully this holds. Now, this might hold, this might not hold. It's a two-way street, right? So I'll just, pull my tool and then hoping that it works. So let me say this was, as a matter of fact, let me say 1 to 10, for example. So with this, we can now play the candles and see what happens. Okay. Seems to be going away. Okay, we're tagged in, and this is it. Now, when price tags in like this can actually hold, or price can just go down. It's a two-way street. It does not matter. What matters is you've mapped out your structure, you've built out your story, and you're following structure. You're not guessing, you're not hoping. You're just following structure and just doing what your trade plan says you should do. So with this, price tags us in, we're in already, 358, perfect time. And then bam, the next 2 minutes, our target is hit. That means this is a 3 minute trade, and then 3 minutes, you've made 1 to 10. You can imagine that. 1 to 10, depending on what you risk. For example, let's imagine you're risking $1,000. That means you made $10,000. That is awesome, you know. Well, I did not take the trade because I wasn't actually even looking at the market at this time. I just felt I don't want to trade NFP. I want to wait for Monday, and then Monday I would now look for setups to trade. So, but this was a switch trade, you know, 3 minutes, and then you know you're really up a good into good profit. So, but this is it. So this was the post NFP trade that happened yesterday. So with this, I've literally just taken you through, you know, my journey from the morning of, you know, around 7 a.m. in the morning, and literally brought you to the evening of how I would view the market, or how I actually view the market is, and then how I mapped, you know, structure. So throughout the entirety of yesterday, I actually did not take a trade because of my bias and different things, you know, that I was looking at, and different things, you know, basically that I expected to happen that did not happen when I was on the chart. So that was it. And this is basically how, you know, you map the market, right? So I want to believe you've been able to pick a thing or two from this. Now, there is something I would just want to add to this before I open the floor for questions, right? There is this tool on TradingView that is actually, you know, for alerts. So for example, typically I will not be on the chart like from morning till evening, right? Looking at the chart and expecting to catch a move. No. I wouldn't be on the chart for that long. So you normally use alerts, right? So alerts will just, you know, tell you when something has come into your zone. So for example, when I saw, you know, when I saw this structure, and I saw that, you know, price had broken structure here, after I drew this zone at the top here, something like this. Now, remember, these are 15 minutes. So around 10:15, this broke structure. So I know there's a break of structure. So my expectation is that price will come in here. So at the edge of this zone here, I would put an alert. So you can see to my right here, there's a plus button, right? So this plus button simply allows me to sort of, you know, create an alert in the system, right? So I'm able to just say, okay, when price comes into this area here, just let me know, you know, just give me, you know, some alert and let me know that, hey, price has come into this area. So when price comes there, you know, the alert will just go off, and then I'll begin to look for, you know, my 1 minute entry. And that's basically how, you know, I trade the market, right? And that's something, you know, you could also add to your tool set. All right, so that's that. Enough of me speaking. So let me just open the floor, and then you can now ask your questions. And yeah, I hope I'll be able to answer the questions. So where's this thing here? Sorry. Okay, so cool. So the floor is now open. So please fire on. If you have a question, just unmute yourself. And then, yeah, ask your question. Okay. Over. Sorry, I was hearing you. Okay, can you speak? Yeah.
There was a point where you deleted a point of interest, like previously, when you did not meet your criteria. I was just wondering is it possible that if you like drag it all along, can it at some point, maybe in the future, be of help, or it's pointless after it not meet your demands at that point in time?
Okay. All right. So let me say, I think I heard the question, but just clarify if maybe I didn't get it perfectly. Now, you know, my point of interest, right? I draw it based on, you know, what I've tested in the market, right? So based on what I've tested, and I've seen that for my strategy, it works, right? Because sometimes if price doesn't come into my point of interest, like this last candle that I drew here, if price doesn't come into my point of interest based on my testing of the, you know, the strategy and also how I trade, there are times when that can be a false move, right? And then what happens is that price basically just sort of tricks you into entering early before actually coming into the zone to mitigate it, right? And that is the reason why, you know, for me, I wouldn't take that. Now, there are people who actually draw because your point of interest, you can actually draw it maybe on the last candle like this. There are some persons who actually draw it depending on what they're looking for. They can actually draw it for the entire range like this, where there was the break of structure, the entire range. They can draw it something like this. Now, if this was the case, if I actually was drawing it for the entire range that caused the break of structure, I would have actually caught that trade, or I would have actually taken that trade, because that's what I'm using. But because my bias was, I'm only drawing my point of interest to the last candle, this pushed up before, the break of structure. I was only restricting my point of interest to that candle. I wanted price to come mitigate that before I look into my 1 minute. And that was basically why, I didn't have a trade there. But if, for example, you backtest your own strategy based on what you know now, and then you backtest it, and you're always taking the entire range instead of maybe the last candle, and then you're successful with that, you can decide to say, hey, okay, for me, if price just comes into the range, I'm okay to just see a 1 minute entry, and then I can just take that 1 minute entry. And that's something that you can trade, right? So yeah, so that's it. Is that your question? If that's not
it's part of it, but I understand what you were saying, that it's just sticking to the trading plan and you're not deviating, because that's what all trading is all about, sticking to a trading plan.
Yeah.
Actual question was, like, I was asking if the point of interest doesn't work like immediately, like, let's say put in an alert, can't you like put an alert for any time it comes back then? Like, even if it's not immediately, just during that day, if you understand what I'm saying. Or is it the point of interest is just for that moment based on the price?
Okay, cool, perfect. Okay, I understand now. Oh, that's nice. Cool. Okay, so yeah, so your point of interest actually doesn't have to be just for that moment, because price can react to that point of interest at a later time, right? Now, but based on how we, based on market structure for yesterday, for example, you could see that because of NFP, price never respect this point of interest at all. Like, price just basically just, blew through it. And if I just play the candle back again for you, you can see that was what happened. NFP came out and completely just took out, did not even respect that point of interest, just went and took out, that zone and all of that. So there are times when price will always come back and respect your point of interest. And let me show you an example. Now, look at this price action. You could see here that, for example, here, there was a change of character here, right? So this became a point of interest, but you can see price did not return here to respect, to either mitigate this, and price just continued going. And that happens all the time. But after a while, this happened on the 4th of, that's Wednesday. But then on the 5th, you can see that price now returned all the way to that point of interest. And then when it got to that point of interest, price now reacted to it a little bit. You can see price pull back up, and then before breaking it through. So point of interest, when you draw a point of interest, there is every possibility the price may or may not respect that point of interest at the time, and at a later time, price may now come back into that point of interest, to react to it. So your points of interest are basically your supply and demand zones that you can also use for your profit target sometimes, depending on the structure of the market. So you can see, for example, here, this was a break of structure. After price broke through, now a new point of interest was created, and price returned, mitigated that before continuing, its upward movement. So price would always react to your point of interest, to your zones, whether immediately or at some later time. And then sometimes, depending on, market structure, fundamentals, and all of that, price may just come and just blow through your point of interest and may not react to it. So you just have your point of interest drawn, depending on, of course, depending on how you're drawing the market structure, and you just know that those points of interest are actually reaction zones. That when price comes into those zones, price may react to those zones. Yeah.
Yeah, so thank you.
All right, perfect. Okay, so thanks for the question.